MMXM, the market maker model. MMXM, market maker model. The MMXM is a smart money based price model that represents how market makers engineer price movement to manipulate liquidity before delivering price to a higher time frame object, PDRA. Structure of market maker model. Three key phases: accumulation, manipulation, range bound, movement creation of internal liquidity, and of course external liquidity. Induced traps set for retail. Liquidity grabs, manipulation phase, sharp move outside the range, stop hunts above or below key levels. External liquidity, as I said, creates imbalancements and emplacements. 3. Repricing and expansions. Directional move begins aligned with higher time frame bias, price delivers toward a PDRA. Unfair value gap order block, or just some liquidity like equal highs, equal lows, or previous day high, previous day low. Key insights: MMXM is not random. It's a blueprint of how smart money clears liquidity before moving to their target. Why it matters for traders: helps you avoid being trapped by fake breakouts, gives you structural roadmap for entries, targeting, and timing, aligns perfectly with SMC concepts, smart money concepts like PDRAs, displacement, and liquidity engineering. Example of how MMXM models can look like. You have two of them, MMSM and MMBM. MMSM is market maker sell model and MMBM is market maker model. The most important things are the little boxes, the initial consolidation, the target, like around here also. Something important I will teach you soon is something about mitigation blocks with the first leg and the second leg of accumulation to hit the PDR higher time frame PDRA, and then the first leg of distribution and the second leg of distribution. That is about the market maker sell model. We will show you now an example of the market maker buy model. Half years ago about the market maker buy model on Euro USD. It's really easy. Initial consolidation, the first leg, second leg, and after that to the PDRA. After that, using what I'm going to teach you about the mitigation blocks of the second leg for the first leg, and from the first leg for the second leg. But that is something I will teach you later on. About the market maker buy model, most times you can use the first leg for the second leg and the second leg for the first leg. Most times in the first or second leg down to the PDRA, the daily order block, there is a order block slash breaker block. You can use that as a mitigation block, as you can see here and also here. It's not an entry like an entry opportunity, but it's extra confirmation because you still want to entry on the order block or the other PDRA from the trend and not from back right there. But it is extra confirmation because once you think right, it's did it hit the first or initial consolidation and it hit like this order block and it's pulling down a little bit and maybe it goes to the other order block. You can also see it as a mitigation block right here. Look like this. You was think, oh, it rejected on this order block right here. It rejected on it. Yes, it rejected, but it came to the mitigation block and the order block right here to shut further up, and also getting out the initial consolidation. Probably if you want to have an entry right on this price, you have an entry right here, stop loss like this, and have a 2 to 1 risk to reward, like something like this. I cannot draw on this laptop. This is not my real. This is my second laptop because my first laptop broke down. That's because why we don't have a lot of videos these days. But this is about the market maker model, the market maker buy model. But there's also market maker sell model. It's exactly the same but inverted. Like it goes like this as shown. But I cannot. I don't have really the time to make about that. Also, just like this. Like this to the initial consolidation. You can hit it. It's just like this. It's almost the same like this, but otherwise. And most importantly is the PDRA. You don't only need to use the like PDRAs on the higher time. You can also use just equal high, equal low, or previous week high, previous week low, And you can also use monthly high, monthly low, or even order blocks on 4 hour, 1 hour. But this is what time frame you're using, and also time frame alignment is really important. I can show you that also next, but that's for the other video.